And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Thursday, August the 11th. I'm John Hogue. Thanks for trusting me with your time. It's an exciting day today. Hopefully you're feeling good and things are going your way in the markets if you're in there already. As always, our focus is context, good risk management, and patience. Sons and Daughters Day today, if you didn't know that. National Sons and Daughters Day. As far as economic numbers this morning, 7:30, the jobless numbers came out. Jobless claims, last were 260,000. They were looking for 263,000. Came out 1,000 short of that at 262,000. Continuing jobless claims, unfortunately, were higher. They were looking for 1,407,000. Came out 1,428,000. I think even the bigger number is the fact that the PPI numbers came out lower than expected. The month over month, they were looking for 0.2%, came out minus 0.5%. The year over year, they were looking for 10.4%, came out 9.8%. So a little indication of slowing inflation, which is good news. The market seemed to like it. I'm kind of happy about it. We're still waiting for the 9:30 EIA petroleum status report today. Stocks higher, as we're all well aware, even despite some of the talking feds kind of being cautionary about being too excited about thinking that inflation has been beaten. Disney takes the new lead in the streaming end of things, surpassing Netflix for the first time. Disney's got 221 million subscribers, Netflix 220 million subscribers. Crude prices rise on Russian oil output forecast for next year. Looking like they're 20% less. Of course, a lot of folks not even buying Russian oil. So it is an interesting situation in crude oil. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. As always, make sure you subscribe to our YouTube channel so you can get notified when we do go live. Speaking of going live, today, Make Hogue Money is still going to be presented in the Zoom meeting. If you want to get into the Zoom meeting, you're going to have to come to that link that I just put in the chat and come into the Zoom meeting, but we're also going to be broadcasting it live on YouTube. This will be a first for us, so give me a break if I make a couple of mistakes in the broadcast or in the streaming of it. If you are watching on YouTube, you will not be able to vote for the trades that we're talking about taking. You can always register and get into the Zoom room, the Zoom meeting, so that you'll have your voice heard when we're talking about taking these trades. Now, what's Make Hogue Money? It's an opportunity for you, the traders, to come up with trade ideas for me to take in a live account. And we take a little bit of time and we try and vote on those, and we see if we can't make me a little bit of money. It's always a good time, I think, and I look forward to presenting it on YouTube as well. Unfortunately, you won't be able to vote on YouTube. You'll have to come into the Zoom meeting to do so, but it's okay. We're going to just see how this goes, and if we like it and you like it, we're going to maybe even expand more opportunities for us to do this. You have no risk. The risk is all on me, but it's your ideas that are going to be making me money. So, checking the VIX this morning, largely just flat at 1976. Dollar index 104.84, down slightly. And the yield on the tenure basically flat at 2.75%. Got to check everybody out here. Dark Kevin, first one in the room. You win the prize this morning. Theo, good to see you. Dimitar, Grim Reaper Trader. Orion, good to see you. Christopher, Randall, Alfred, Bill, Brody, Jules, William, Denise, Rooster, all is doing okay with the family. Thank you very much, Rooster. And again, thank you all. Serenity Trader, Rusty Golfer, my spirit animals, Sarah, good morning, prayers and love to you as well. Ron, good morning. Anne Marie, good morning. It's good to see you. Scott saw and he conquered. Mango Heist, Joe, good to see you. Onward, upward with step 2. Good job. JD, good to see you this morning. Chilling with Dylan and Taurus Trader. All right, Marcelo popping in there. We got Vlad, we got Nick, Sadaro, good to see you. Andrew Hennessy, good morning. Let's get the bag. Shaw, it's good to see you. No, it's all right. You're not late. We're here. We are going to be trying to get through this market forecast by 8:15 so we can get into Make Hogue Money in enough time to make a couple of ideas and throw some things around and see what we're going to do in those S&Ps this morning. Looking forward to seeing, how we can do with the dual stream, if you will, with the Zoom room and on YouTube. It's going to be fun. It's going to be interesting. It's going to be a challenge, and I always like a good challenge. So, without further ado, why don't we just go ahead and jump in to our charts here, starting with the daily in the S&Ps. Did I take care of all the business? I think I did. I hope so. Calves and Cubs, good to see you. Aviv, good to see you. Trading Research. All right, let's take a look. So, boy, oh boy, if I'd have known how right I was on that Tuesday 3 weeks ago down here when I said there's a paradigm shift in this market. So there is something else happening. And if I'd known that it was going to be this good, I would have married a whole bunch of longs into this move to the upside that is now picking up steam, or at least attempting to. We got some new business in this market yesterday, breaking out above weekly kickoff high, closing above weekly kickoff high on decent volume in futures, adding 19,000 estimated new contracts in open interest. What do we look at to see a healthy market? We look at increasing volume and increasing open interest. The market is ready to get a continuation and a gap to the upside. What do we have here? We have... I think we're a little goofy here. There it is. Our 200 session moving average is coming in just above here. That is 42.50. It looks like we're already heading to that direction. We do have continued space above that. We're looking at these swing highs up here at 43.06 as a potential for continuation to the upside. As long as there's no bad news, I see absolutely no reason why this can't happen. After all, the market is not the overall economy, and we're getting hints of some positive things in the overall economy. So let's take a look at the 30-minute chart. We ended up basically with a kind of a late spike yesterday. The market looked higher without the opportunity to spend time and accept above the previous range for the session. So I'm calling this a late spike. We've got settlement here, which is 42.10. We've got all of our overnight inventory to the upside there. So we're looking at some shorter time frame, weaker hands longs here that are going to be hoping that they're going to see the regular trading hour traders come in and buy the hell out of this market because they're all already holding long positions. And they want those positions to pay today. These are not your longer time frame traders that are trading overnight. Look at the volume. These are pea shooters like me looking to make a profit during the day. So all these longs are going to be out by the end of the day. If they don't get what they're looking for, we may see the market come back and close the gap. We do have the nuances, the tea leaves, the chicken bones, if you will, saying that this market is ready to continue higher. We've got a gap to the upside. If we can't close the gap, we're going to be looking for opportunities to trade in the direction of the gap, which would have us looking for longs. We have the late spike that when we open above a late spike is another nuance that is a positive that says price is being accepted at higher prices. We had good volume yesterday. We had good open interest on this move to the upside yesterday. This blue line here is a previous swing high back. I think it was in May that we were looking at for a target yesterday. The market really targeted and then became magnetic to it. It seems to be trying to leave it behind. So if we take a look at all the stars and all the tea leaves and all the chicken bones, and we take a look at over at any logs where there might be some fish, it looks like the fish are going to be on the upside of the boat. At least for now. Don't forget, anything can happen. Anything can happen. But if there's no bad news, I see no reason why this market can't continue this march to the upside. The auction seems like it has a new breath of life to it yesterday with that increase in volume and open interest on the upside. It's not going to be easy. We're going to be probably considering doing the opening range trade and make Hogue Money this morning because we're opening out of range, out of balance, and we have a new recent high in the overnight session. Regular trading hour sessions and their big egos don't like that. It seems nine times out of 10 when the market's rallying and we put in a new high or a recent high in the overnight session, the regular trading hour session takes it out. Here we had that recently here, I think. Here's an overnight high. Took a couple days, but we came and took that out. So really cautiously looking for opportunities on the long side unless something really changes. Here's the crude oil. Yesterday, we had a nice move down to this trend line right here. We were looking at this as a high target area where we might be able to find some fish. And boy, there were a couple of whales under there by the end of the day. We had almost a $4 move from that low to where we settled, which was 91.93. Overnight inventories to the long side. We've got a gap to the upside here. So we've got short time frame, weaker hands traders looking for help in the regular trading hours when we open with the gap and we have long overnight inventory. Those shorter time frame traders are looking for buyers to come in and continue this push to the upside. There's plenty of targets. There's plenty of things to look for. This is no longer a thing here because we already took that out. But we do have space up above. We got, that last week's high, we got naked points of control everywhere. We got weekly kickoff high just above that. There's still a gap up there that we have yet to close. If we can't close the gap, gap rules. If we can't close the gap relatively early, we look for opportunities to trade into the direction of the gap, which would have us looking for longs. If we open out of range and out of value, and we re-accept inside this area of value, this is a huge value area, special situation opportunity for us. If we can't close the gap, we're looking for longs. But if we accept inside value from yesterday, there is a high probability or a higher probability, not, it's nothing huge, but there's a higher probability that upon acceptance inside value from yesterday after opening outside of range and value, at some point during the session, price could reach to the other extreme of value. That's the value area special situation play. Excuse me, my goodness. I'm talking too fast, maybe. We're gonna see the opening range here just in a couple of minutes, but I don't want to waste too much time. We may go back and see that opening range in crude oil and see if it offered a good opportunity. Here's in the Nasdaq. Now the Nasdaq and the S&Ps, similar products, different situations. Here's the sitch. We broke out of this area of balance yesterday. Okay. We've got space up to here. We've got our 200 session moving average. Okay, just above here. We haven't reached that yet in the Nasdaq. So while the Nasdaq is appearing to be stronger chart-wise in the moving averages, we're not quite to this one yet. So maybe I got to crush this down a little bit again so I can. Okay, it looks like it's about right. So we've got these swing highs that we're trying to target in the S&Ps today as well. We have not yet taken these out, and we've got our 200 session moving average. We added 5,600 in open interest yesterday. We are now holding above the weekly kickoff level. The weekly kickoff levels are different because they're different markets. We got to see what we do today. If we continue to build volume and open interest on this push above this weekly kickoff high, again, I see no reason why these markets can't continue to push higher. As a matter of fact, I'm really hoping that they do. I'm trying very hard not to carry that bias with me. I'm trying to trade what I see, and what do we see? We got a visual target, the 200 session moving average up here, which is right around 13,628. We've got open interest volume increasing yesterday on a push to weekly kickoff high. We were above weekly kickoff high today. What are the 30-minute nuances saying? Well, we also had a kind of a late spike yesterday. Okay, we put in a new high right at the end of the day with no time to accept it. We've got overnight longs. We've got a gap to the upside and the late spike. So the nuances are saying, the tea leaves, the chicken bones, are saying, yeah, there's good potential for the upside here. We've got the weekly kickoff high, which was supportive here, broke down below, resistant here, back above it. If we can't close the gap, if we can get to weekly kickoff high here, this looks like a kind of a target-rich area here. There might be some lunkers. Might be a couple of northern pike here, or at least a couple of good fat walleyes so we can have a sandwich later. But the point being is we've got the nuances saying to the upside, so we're going to be looking to buy weakness unless something changes. What is it when something changes? Opening out of range, out of value, acceptance in yesterday's value area changes everything. That takes us down to value low from yesterday. Doesn't change the longer term view, just the view for what we're looking at today. Let's see what we did here in the crude oil on the opening range. We're a minute past it, and we're still in it. Go figure. Go figure. Looks like we're going to take out the high of it now. Well, let's see what happens. We may come back to that if we have time. On to gold. Here's the daily. Medium time frame structure, I'd say that 10 times fast, is still set to the upside. It's still intact. We added 2,700 in open interest yesterday on an overlapping to higher range but a lower close. Volume was just okay. Is the upside auction that we've been experiencing, that I believe has been struggling since it began, it seems to be continuing to struggle. We're centrally located between weekly kickoff high and low. The weekly kickoff high is a measured move. we got last week's high just right in the way. Doesn't seem like there's a whole lot going on here. If I was going to be looking for this market, I would want to see a little bit more momentum, a little bit more volume, a little bit more open interest coming in. When we did add some open interest yesterday. 30-minute chart. Yes, PPI results are out already, and they were better than expected. Good morning, Vince. So, overnight, here's where we started the session, right here. We don't really have any overnight inventory with which to deal with. The market came back up to settlement. Perhaps we did get a little bit too short during the day, but I think we've reconciled that. We opened in range and in value, which says to me, I'm going to try and stay patient and look for better trade locations as the day goes on. There's very little change in the perception of value to an ounce of gold. As a matter of fact, settlement 2 days ago was here. Last night's settlement here. We're just kind of hanging around last week's high, wondering what the hell's going to go on. I'm getting a little bit backburnered on this market, at least for now. With the risk-on attitude towards equities, I don't see any real reason for this thing to be ripping to the upside. And if we start breaking structure to the downside, I could see at least coming down to recheck this naked point of control here, maybe a retest down to weekly kickoff low. Not really sure. A lot of cognitive dissonance in this market for me. Euro. So yesterday, on good volume and a Pretty substantial increase in open interest of 2,700. Excuse me. We had a breakout above the weekly kickoff high that we have been watching for, weeks. We've been trying to get up there. We finally seem to have exhausted the sellers here. Are those sellers going to turn tail and go the other direction? We've got a whole bunch of space above here. What am I looking at here? What am I doing? We closed above weekly kickoff high. That's healthy. A retest of the weekly kickoff level in the overnight found some shorter time frame buyers there. Let's take a look at the 30. So here's our overnight look down there. 17. So we're holding some overnight longs, but we're in range and we're in value. I'm looking for opportunities on pullbacks to buy weakness in this market. We see the dollar's off a little bit today. Technically, this market is set to continue to the upside, and some of the nuances or chicken bones are saying that. We had decent volume on this upside yesterday. We added a whole bunch of open interest to the upside, which indicates new business, new buying coming into this market, new money coming into the long side. See if they protect themselves at this level between last week's high and weekly kickoff high. This is a very target-rich area here. Value low, settlement, last week's high, weekly kickoff. It's all right here. It's a pretty target-rich area. And that's a big log to find some big catfish underneath that bad boy. Right. The 10-year... it's holding structure, just kind of holding along the bottom of the channel that we've got here. Not really near any weekly kickoff levels. We lost 8,800 in open interest yesterday, probably off this push off of here. Take a look at the 30. In range and in value. Overnight inventory, maybe a little bit to the long side. I'd be looking for opportunities to perhaps look at the overnight low for a possible opportunity. We've been trying to close this gap for a while, and it seems to me the best place to limit risk, if I'm looking for longs, is down here near the overnight low. Don't really see anything to jump into really early in the session here in the 10-year. Anybody see anything here that they might look familiar? We got a cup and saucer, or a cup and handle. That is a big cup and handle. Now, typically after a cup and handle, the resolve is to the upside. When it's a V-shaped cup, though, it takes some of that upside oomph away. If we're trying to think of this in the longer time frame, I would say with this cup and handle, the probability is to the upside. But again, anything can happen. If it's a nice round cup, I think it really lends more to an upside continuation. It doesn't negate the fact that this is a cup and saucer, and there's a probability that the price could continue to push higher off of this. Yesterday, a little bit higher volume. Almost no change in open interest. We lost approximately 170 in open interest. That's extremely inert. On all this, maybe it could be a misprint. I mean, those open interest numbers aren't absolutely perfect right now. We got to wait for the final to come out. But I find it difficult to believe that all this upside momentum and movement only lost 170 in open interest, approximately. Settlements here, 820. And we've got a gap. We've opened with a gap. If we can't close the gap, looking at the picture here, we're going to start looking for opportunities to buy weakness with this cup and handle. With this gap, if we can't close that gap, it offers us the opportunity to buy weakness for potential continuation to the upside. We still have a naked point of control up here that has not yet been tested in regular trading hours. And we've got, plenty of things to look at above. Plenty of things to look at below, too. All right. All right. Joe is saying the opening range trade played. Yeah, it's open now to the upside, so it looks like the opening range in crude oil is holding at the low of the session. 93.80 is the low of the opening range. Keep that on your charts or in your mind. It can be important for us to hold that level in crude oil if you are trading crude oil today. All right. We managed to get through a lot of information there. If I went too fast, I am sorry. We're just trying to get to the Make Hogue Money session with good time to discuss things. Looking for a couple of victims to talk, and I know I will get a couple, and I look forward to seeing everybody there. Let's take our deep breath. I am going to stay humble, grateful, and creative today. I know I'm going to miss a couple of trades. I'm going to have to be okay with that. I know I'm going to have a couple of losses. I'm going to accept those as payment for information from the marketplace. And we got a busy morning here. So come join me at Make Hogue Money. I should be up and running and have everything open by 8:20. And I look forward to having a good session. Let's make a little dough. It's all on you. Bring your knowledgeable trader with you, because we got to try and make a little money for me. Lacey needs some biscuits. All right. We'll see you at Make Hogue Money. If not, I'll see you. Well, I won't see you for the market recap. We're going to have the podcast today. So the next time I see you, if I don't see you at Make Hogue Money, will be tomorrow morning, 7:45, market forecast. Looking forward to seeing you there. Trade well today if I don't get to see you. If I get to see you, looking forward to it. Trade well.